Yeah, so welcome everyone. And today we're going to once again talk about a lot of things. This has been an exciting week in the sense that we did reach 11,300. We crossed 11,300. And then there had been a bit of correction over the last few days in the market. But overall, I think the trend in the market is bullish, the overall trend with corrections coming along the way. And so, welcome back to Kingdom Wealth Creators. We're going to have our 19th session today, August 1st, beginning of a new month. And this is, I have also something exciting to announce today, even as we start the new month. But welcome to Learning Session 19. So let's start by talking about, what has been the monthly performance in July for me. Um, Basically only on the futures and options side because this is what I really stressed on, and I will show you how this, what has worked out. Okay, so what happened? If you look at this, this is an entire Excel sheet of uh, all the shares I traded in this last month on the futures and options side. You will notice that there have been some which have not gone right. And I think actually those that didn't go right are things that I exited too early. I wasn't patient enough. And this has something to do with our mindset also, which I will explain later as we go on. You can see here the ones in bold, Lupin and Aura Pharma, are the two FNO positions that I have opened in August. I started them in July, so they included here, but they're continuing. But everything else. So if you look here, it says that I invested about 33 lakhs, but I didn't invest 33 lakhs in one shot. Neither did I have 33 lakhs then, nor do I have 33 lakhs now. So it was not 33 lakhs in one shot. It was entering and exiting, things like that over the 1 month. And if you see a return of almost 8.5%. But I want you to know the truth that actually my investment for FNO was only 8 lakhs in July. Uh, and then I upped it to about 12 lakhs on July 23rd. So for almost 3 weeks, it was just 8 lakhs. Then the last 1 week was about 12 lakhs. So my return, if you average it out, comes to about 25% in just 1 month. And why is this possible? Is like I've said in previous sessions, is because two things. One is the edge, and the second is the hedge. Now, if you look at the return, the win percentage, almost 88%. That is because the edge is good. Okay. Now, where have I actually, if I look at it, some of these things I have messed up. Okay, I'm telling you the truth. I messed up in some of these. For example, let me give you an example. Okay, HCL Tech. I bought this was I think in the first week I bought it was not edged, but I bought it at when HCL Tech was 560 or something, and it went to it was a 580 option. It went to 590. I sold it off at a profit. But today HCL Tech is over 700. Okay, so if you ask me, if I had held on to that option, I would have made a lot more. I messed that up. Uh, JSW Steel, I sold it for a loss, but eventually it ended up in a profit. Cipla shot up after I sold it for a loss. Titan, I sold it for a loss, went up so much. Sun Pharma, again, sold it off for a loss, but it went up so much. And even the ones that I've sold off for a profit, there have been times I haven't entered well, exited well. So this is far from perfect. And I also learned a few things, like, for example, when I did NMDC and I did Berger Paints, I went with options, hedging options. The problem with, say, a trade for NMDC is the volumes are low. I found it difficult to exit the options later on. So even though I entered, I found it difficult to exit them. And so there was a struggle with some of these shares. So I have realized that it's easier to focus on high volume FNO trades rather than just any FNO. So that's one thing that I've learned over this time. Another thing that I've started is to hedge them and also wait till the end of the month to close out the edges. Why hedges? Why? Because, for example, let's look at if you look at Pidilite. Uh, Probably Pidilite is not the best example. Even if I were to look at, say, let me see, Dr. Reddy's future, I exited 4,100. Dr. Reddy's today at 4,500. Okay, but you can see that even the option that I exited at a higher price from 51.4. I exited at 68 at a loss. At a loss because when I exited the future, I exited the hedged position also. But if I had waited till the end of the month, that position would have become almost zero. Okay, and I would have made a bigger profit just by the hedging. So this is something that are things that I will change uh, as I work towards this next month. Uh, Learning to get into positions that are having a lot more volume, and also being careful into where I go with futures, where I go with options. And so that's just my thought. I've realized that this is really powerful. If you do it well, you can, and you don't have to trade every day. Uh, I think the last 1 week, even though the market was going all over the place, I was very relaxed. I wasn't intradaying much. Just had a few positions that I took a look at, and because they are hedged, a lot of comfort level there. Okay, even if the position goes down, the hedge works in our favor. If you look at the now, if you, for example, if you look at Aura Pharma, I bought the futures at 811. It went to 815 on that day. This was on Wednesday. And then it came down a bit, and that's when I hedged it. I think it came down to 807, and then I hedged it. So if you look at the 900C is now 39. So I have lost 26 rupees on the option sell, on the option writing that I did there. But of course, I've gained a lot on the futures itself. Now, what I have to do to make maximum out of this is just hold Aura Pharma till the end of the month. Because now, wherever it goes, I will still make a good profit and eventually close out the option also for a decent profit. Okay. And so that's important. I can always hedge an higher option later if I want to as the month goes forward. And the same is the case for Lupin. Lupin, actually, I started with a July future, and then I jumped into an August future. So this is, I'm still holding that, but now it's a August future. That's all. And so these are thoughts that I basically have when it comes to futures and options. And this is basically performance. I didn't struggle a lot to get all of this done. Where I struggled probably was in the sense that I didn't have enough margin. I started only with 7 lakhs in FNO or 8 lakhs in FNO. I put it to 12 lakhs towards the last week of July. But in August, I've upped it to now almost 30 lakhs almost that I put into FNO. Just because I realized, sometimes I want to get into, there have been so many trades that I saw that I didn't get into simply because I didn't have enough margin. Then I could probably do an option versus option trade rather than a future versus option trade. But I just felt that, it is better to go with a future was hedged with an option trade rather than option. And so I've increased my investment in futures and options going forward, and we will talk about this later. All right. So, like I said, my actual investment was only 8 lakhs at the start of July. On July 23rd, 3 weeks in, I put it up to 12 lakhs. And so my actual return, even though it shows 8.5%, is almost actually 25% in 1 month. And that's the power of FNO. All right. So I want to talk a bit about the new SEBI rules that have come in. Okay. Now I know that this is something that is plaguing people, especially if you're doing you do your trades on the intraday side. This is a question that lots of people have. So let me just talk a bit about the SEBI rules that have come in. One is that see, brokerages. I'm not sure if Zerodha does this or not, but Finvastia does it. Asta Trade does it. A lot of the brokerages that I know will give you a lot of margin limit beyond what the NSE has prescribed. Okay, the NSE actually prescribes something called a margin called VAR plus ELM. Okay, which is basically the variable risk with the possible margin loss that can happen. They have formulas for this depending on the volatility of the stock, depending on the volume of the stock, depending on the reliability and the fundamental value of each of those stocks. Each share, especially the bigger shares, would have a larger intraday margin. Okay, so what they're talking about right now is basically saying that brokerages cannot give you more margin than what the NSE has prescribed for that stock. Okay, it is not saying that they will take all the margin away. They're just saying that they won't allow brokerages to give you more margin than what they have prescribed, what the NSE has prescribed. Okay, so that means basically you can still do intraday with a margin which won't be as high as before. Okay, and the other thing that the rules also say is that now you can use your shares and your ETFs, your liquid Bs, Nifty Bs, whatever ETFs that you have. All of that will be in your holdings and can be acted as collateral for margin. Okay, which is a big deal, especially on the FNO side, just so you know. Okay, so let me explain all of this a bit. Okay, first, when it comes to VAR, for example, Reliance, the VAR plus ELM is 22%, which means to hold 1 lakh of Reliance worth of Reliance shares. So 1 lakh right now, Reliance is around 2,000 somewhere there. So for 1 lakh, I can hold 500. Sorry, 50 shares of Reliance, right? But intraday, if I based on the VAR plus ELM ratio for Reliance that NSE prescribes, it will only cost me 22,000 rupees to hold that 1 lakh shares for 1 lakh worth of shares for intraday. But the fact was that before, in certain brokerages, I could do that for as less as 10,000, 7,000, 8,000 rupees. I could hold 1 lakh worth of Reliance shares for intraday. So you can see that intraday margin has been removed, but the VAR plus ELM is still working for people who want to do intraday. Doesn't mean intraday volumes might reduce a bit, but it doesn't mean intraday is out of the picture. I think there's a bigger reason why we should think intraday is out of the picture, and I'll get into that. Okay, but just so you know, this is what they meant by the margins being removed for intraday. It doesn't mean all your margins are going. It just means that the brokerages cannot give you extra margin compared to what the NSE already has prescribed. Yeah, I hope that helps people. Okay, just to allay that fear. Now, the shares and ETFs as collateral. In the previous months, if I wanted to put my shares as collateral, and we call it pledging. If we were to pledge it, the collateral will then be held by the brokerage, and it is not ours. We'll have to first unpledge it before we can sell it. But now, any shares that you have, or any liquid Bs or Nifty Bs or whatever you have that you bought and kept as holdings, they will be in your holdings itself, but they will act as collateral. I'll give you an example. With, of course, there is a haircut for each of these collaterals. So when you have a collateral, that collateral, the margin that is available for that collateral won't be 100%. It'll be probably 90, 70%, depending on what the specific share or ETF you're given. Okay. So here's a good thing. Collateral can be used as margin to buy or sell futures and to sell options. It cannot be used to buy options. Also, it is actually not allowed to buy shares with collateral margin, but I know that you can. Okay, the system will allow you to, but it's not advisable to. It is technically it's not illegal, but it is also not something that they advise, and you're not supposed to actually do it. So you can use your collateral margin to buy or sell futures, and also to write or sell futures, but not to buy. To write or sell options, but not to buy options. Okay, so collateral is basically you can buy or sell futures. That also includes commodities and currencies, and you can also sell options, but you are not supposed to actually use it to buy options, nor are you supposed to use it for intraday cash trades. Okay. But it is not illegal technically, and I think the system still allows it, but I would advise against it. Okay. These are the basic things that these new rules are talking about, and I think it's very important that we understand them. Okay. Now let me give you an example. Just last week, I bought liquid Bs. Now, liquid Bs is the Reliance Mutual Fund ETF. I bought 1,500 of them. They trade at 1,000. Basically, they trade at 1,000 every day, 1,000 rupees every day. So it's like it's a liquid debt fund ETF that is traded on the Nifty. And so this, because it's very liquid, is treated as cash. Okay. So what I've done is on Finwase, I bought this and then I transferred it from my Demat account into my holdings. And because of that, you can see 15 lakhs worth of liquid Bs is showing as margin of 13.8 lakhs. So they've taken a bit of haircut. About 8% is a haircut in terms of margin, but I have 92% of that to hold as margin to buy or sell futures if I want to. Now here's the good thing about this. Okay, here's the good thing about this. What this basically means is that if I were to buy shares that I think are going up, or if I were to buy liquid Bs, because liquid Bs you get about 6 to 7% interest on a year, I can just hold them. I can earn the interest, or the shares going up, the value increase on the shares. I can just have that benefit, and at the same time, I can use that as margin to trade futures and options. I think that's a very good move. Now, if you look at the FD rates, for example, this is current FD rates in 2020. you can see, you can probably get between 3 to 7% in most of the banks. Okay, and but it's going to be difficult. If you put an FD to use that as a collateral, you'll have to do a lot of steps. But what I'm finding is very simple. I can put liquid Bs or whichever ETF. It can be BlackRock, it can be Nifty Bs, whatever you think is good for you. Buy it, keep it as holding. You will earn the interest on that. At the same time, you can use that as margin. So eventually, my plan is to move more of my cash into something like liquid Bs or any other ETFs and just hold them as margin. Okay. And so, okay, if you look at here, they say that you can get between 5 to 6%. Uh, Even if you get 4%, okay, that's good enough. Because a lot of us actually have cash simply lying around in our trading account. I would rather put it into something where it's still earning money and trade off of it. Okay. And that's a huge, powerful tool that most of us don't know that if we can use, it's really good. Okay. Now, here's the market outlook that I want to share with you. Okay. This is, I know last week has been a little kind of weird for most people. They were like, what's happening? And it's always good to have don't have an intraday outlook on the market. It's good to know where the market is going for the day, but have a larger perspective of where the market trend is actually going. And so last week I said, hey, look, I'm definitely seeing the resistance between 11,200 to 11,300, but it's going to test that. We might see a bit of correction here and there, but the overall trend is bullish. And if you look at the Nifty, for example, you can see that it's still in this channel, even though the last 3 days, you can see it went to 11,340-ish. And from there, it's been, correcting a bit. Now it's at 11,089. There's a good support at 11,050. Actually, 11,050 was not taken out on Friday. And so I think that's a very good support there. There is a possibility that that support could get broken. I'm not sure. I actually couldn't figure out what the trend was on Friday. Friday was a very trendless day for the index as a whole. And the reason for this also, I'll explain this, is because volatility is coming down. The Nifty and the Bank Nifty are not making, those big moves. You can see here in the good old days from March onwards, you could see the candles were huge. Sometimes, the daily and the 4-hour candles were huge. But today, they're like a bit slow, all of that. It's because volatility has come down. The Bank Nifty's case actually broke the trend line, but there was a support at 21,400-ish. I drew the support there in the morning on Thursday. It actually came to almost breaking it. It touched it and then it went back. The first candle in the morning, intraday, it went and touched that line and then it went back up. So I'm actually seeing a possible turnaround in Bank Nifty in the next 1 or 2 days. Because a lot of HDFC, ICICI, HDFC Bank, ICICI, HDFC, a lot of the shares have been beaten down, and so there's very likely going to be a short-term reversal in the Bank Nifty. Of course, if it breaks down these levels and the Nifty also breaks down these levels, then obviously the downtrend will continue. But I can possibly see a reversal coming up around here. Okay, the indications are there. But anyway, these are what is the outlook for the next week? I think and the next month, the trend is overall still bullish. Okay, we have built up a lot of support right now. We have a support at 11,050. We have a support at 9,990. We have a support at 10,850. We have a support at 10,990. We have a support at 10,500. So there are a whole bunch of supports here that, if the Nifty wants to go down, it has to break through all of this. And the other thing is, a lot of stocks have already corrected quite a lot, even though the Nifty hasn't corrected a lot. Reliance, HDFC Bank, ICICI, HDFC, the heavyweights, Hindustan Lever, have all corrected quite a bit, and the chances of us going back up in the next week is quite high. Just so you know. That's my outlook. Now, let me come down to a bit of trading psychology. Okay, trading psychology. I know that most of us, we've been doing a lot of intraday trades. In fact, a lot of people ask me every day, okay, what's the intraday for this? What's intraday? I want you to know, intraday worked a lot when volatility was high. In fact, volatility was at 86.4. Okay, when the market fell from 12,500 to 7,500, Volatility index for India increased to 86.4. The volatility index for the Nasdaq and for the US markets increased to 85 something. Today, the volatility index for India is at 24.2. Volatility index for the US markets is around 24.5. The US markets have gone beyond those pre-pandemic levels, which tells me that bullish trend is already on. But what happens when volatility index reduces? The So we are actually back to almost May 2019 levels in terms of volatility when it comes to India. What happens when the volatility index? You can see here. Okay, this was May 2019, and then it was much lower, 15 and 15-ish, 16-ish, during the August to November, January 2020 time, August 2019 to 2020. But then when February happened, this whole spike came. It went all the way to 85.5. But today, it's back to good, reasonable levels, May 2019 levels. Okay. And so what happens when volatility goes down? Violent movements that we normally see, ranges been going up and down, reduces, which tells me that it's difficult to expect quick and huge movements in intraday trades. Okay, so why do we do intraday trades earlier and why do we still do them now? Is because we want those quick and explosive moves. Well, I want you to know those quick and explosive moves are not going to work so much. Okay, yesterday I sat and watched the Bank Nifty do no moves at all. It was trading in a range. There wasn't a lot of movement per se. There was a bit of struggle. So violent movements have been reduced. That means intraday trading, the scope has become even less. And we need to train our minds to think short term now. Okay. I personally am not a big fan of long-term investments, other than put it in liquid-based. Okay, that makes sense. Use it as collateral. At the same time, intraday now, I'm not a huge fan either. Not that I don't do them. I do trades, intraday trades. I do have long-term investments, but my focus has shifted to short-term, and I need to also think like that. Now, what do I mean by think like that? I know a lot of people, and I also struggle when something that I buy goes down a bit. I'm saying, oh, should I sell it off? Should I do this? Should I do? What's going to happen? And you get afraid, and because why your mind is trained to say if it's going down now, it's going down forever. Because that's what intraday does. The trend changes during the day. That means it's not good for the stock. But that's not true. Even during the day, sometimes the stock can go up and down. All of that happens. So we got to train our mind to think more short term now. Okay, we got to look at short term trends rather than intraday trends. Okay, that's one thought. So the trading mentality has to change. I can no longer think intraday because volatility has come down so low. I can no longer think intraday. I need to think short term. That can be bearish and bullish. Okay, it can be either way, but it has to be short term. And we have to focus on short term gains. So a lot of my portfolio now is geared more towards short term rather than intraday or long term. Not that there is nothing that I don't do long term, I don't do intraday. No, I do those, but the larger percentage or chunk of my portfolio is now on short term. Okay, and especially with the new SEBI rules now, collateral has come in, option hedgings, the hedges, your margin for hedges have become much lower. So all of this tells me that this is the new focus that we should have. Okay, so trading psychology, trading mentality has to change. Right? Patience has to increase. I mean, it's not moving. Why is it not moving? I sometimes also think that. Why is it not moving? Well, if it's not moving today, volatility is low. It might move tomorrow. If your edge is right, and I have suffered because of that in July. When I saw Titan going down, even though my edge was correct, one day I saw Titan going down, I sold it off at a loss of 10,000 rupees when I could have gained almost 1 lakh rupees if I had been patient. Okay? And so that happens. We have to increase our patience. You cannot be impatient expecting the market to give you that profit in the next 10 minutes. That's not going to work anymore. Okay. We don't have to trade every day. There are days. I think the last 1 week has been very relaxed for me. I'm just telling you, because I wasn't intradaying much and because the market wasn't moving much, I was a lot more relaxed and I didn't actually trade every day. There were days when I just didn't do any trades. I entered positions for the short term, or I exited positions for the short term, but I didn't trade for the days of intradays. Okay, so that is a trading psychology that has to move. Okay, and then you don't have to do 100 trades or 10 trades a day. I think it's important to look at short term and pick up a trade. Example, I gave a Lotus Lab uh, recommendation, 50% in 2 weeks. Okay, so if someone bought it at 600 when I told them, it closed at 920, something like that. I sold it off at 700 something, and I'm like, not even 700. I sold it off 680 something. I'm like so upset that I sold it off so early. Okay, yeah. So we got to be, our trading mentality has to change. It has to change from this very intraday thinking to a short-term thinking now, because volatility has come down. Okay. Next, I want to talk about the high net worth plan. This is something that I've just started and I'm launching, and so this is what I'm really excited about. Uh, uh, I want you to know that this is good if you have a capital of 3 to 5 lakhs or more. If that you have, great. Okay. I wouldn't recommend this for people who are investing like 10,000, 20,000, 30,000 rupees. Why? Because when you invest, say you put it into a trade, options trade, the moment the needle goes down into the red, you start panicking. Okay. And so this is not for people who are, get anxious about each trade. Sometimes you just have to keep quiet and wait it, watch it out. Have to be patient, not anxious. Understand today it might go down, but if your edge is right, if the trend is correct, tomorrow it will go up. Or in the, I have watched this happen to me in July. There have been some trades that I picked that actually all the trends, the trades that I picked, if I had been patient, all of them would have worked better than what I got out of. Some of them have been good. I got out of Reliance too quickly. I got out of Berger Paints too quickly. I got HDFC. I got out well. Okay. PD Light. I got out well, but TCS I kind of got out well. But TCS has gone up again, and HCL Tech I didn't get out. I got out too quickly. So I am learning that it is good to be patient and not be anxious when it goes down. Okay. And hedging really helps. So in the high network plan, the plan is to always hedge. Okay. Hedging will reduce your initial profit, by the way. For example, if it goes up and you hedge it, that will actually act against your profit for a while. But towards the end of the month, that hedge will actually help you, because you're going to get, if it doesn't hit that hedged target price point or the strike price of the hedge, you're going to get that much money too. If the share goes down, you're going to still make money, even though it goes beyond the price where you sold it off at. So there's a lot of benefits of hedging, but we have to be patient, anxious, and not be anxious about each trade. Okay, and maybe do only 1 or 2 trades per week, short term, holding it for most of the month, things like that. Those are what the basic thoughts are for the high net worth plan. And what I'm doing right now is, like I said, I've bought ETFs or the liquid Bs, and I'm putting that as collateral. And I will buy futures or options and hedge it by selling options based on the margin from the collateral. And you can gain. I'm not saying this is going to happen every time, but you can gain, because I noticed the edge is right. It's just a matter of patience and entering and exiting properly. You can gain in between 3 to 8% per month. Okay, so if you're looking at, for example, I traded with maybe an average of 9 lakhs, and I made a profit of 2.8, right? So that was, and I didn't do everything really perfectly well. I made few losses because I was impatient, all of that. And so this is a real possibility. Okay? I'm being very conservative here because we cannot predict every month, but even 3% is what you would get in an entire year on a FD now. So if you can get that in a month, that's good, right? And so why I would recommend this for people with a little bit of capital is because the edge is powerful. Like I said, July we had a 88% accuracy in July. 88% is huge in the Indian market, just so you know. Okay, and my hedged position saw 25% return in July, based on how much I actually had invested, not the get in get out total investment, but my actual investment in FNO was about 8 to 9 lakhs, 8 lakhs initially, 12 lakhs by the in the last week, so an average of 9 to 10 lakhs. Okay, but almost 2.8 lakhs return. Actually, it's more than 25%. I'm being very, again, conservative here. So that's a good return. And that's what we can do if when it comes to the high net worth plan, right?